Welcome, ladies and gentlemen, Vancouver Resource Investment Conference 2017 here in January. And yeah, it started, it's the first day, it's almost 9:30 in the morning, the hall is now filling slowly, and we have our first interview partner here, Jack Perkins, the Vice President Investor Relations from Pershing Gold. Jack, good morning and Happy New Year.
Good morning.
So, Pershing Gold, you're an emerging gold producer out of Nevada. We have interviewed you several times, and I would say now you are really on the path into production. But before we dive into that, maybe can you summarize a little bit what have you guys achieved 2016?
Yeah, absolutely, Owen. Thank you. 2016 was a pivotal year for us. We published our PEA on Relief Canyon with some very strong, robust economics. As you know, Relief Canyon has the lowest initial capex among its peers and is a very low cost
How much is the
producer.
capex around?
Between 12 and 22 million, depending if we sell for contract mine. That gives us very strong IRRs. It's low cost, between 7 and roughly 800 an ounce, all-in sustaining cost, depending on the way that we mine it. So we published the PEA in 2016. We received the permits that we need to start mining.
That's important.
Very much so. And at the end of the year, we raised $7.5 million gross, which puts us in a very strong cash position, combined with nearly $10 million on our balance sheet from our last financials.
Great. And I think Sprott also came on board, right?
Absolutely, yeah. We entered into agreement with Sprott Resource Lending. It's a line of credit for $20 million to advance Relief Canyon.
Wow, that means you really have then enough money to do one or the either way, right?
You know, it puts us in a great spot with a lot of options, absolutely, yeah.
Okay, super. So let's come to 2017. The year already started, and I think your drills are turning also, right? Or have turned, let's put it that way. You just brought out the first phases of the drill program. So what are the next goals you want to achieve, and what are the next steps you need to do?
Absolutely. I mean, I think the thing that everybody's watching, the thing that's the most exciting is the pre-feas coming out on Relief Canyon in early 2017. That's going to refine those strong economics from the PEA and contemplate not only sell-for-contract mining, but also truck stacking versus conveyor stacking, and really give us a refined cost and capital expense estimate to restart Relief Canyon.
Great. And I know it's guessing, it's a forward-looking statement for sure, but do you think it will be quite close on the PEA, or maybe a little bit better, hopefully?
I think the pre-feas is going to do a few things. It's going to give us more confidence in the asset. It's going to allow us to define reserves under 43-101. And for a lot of investors, they want to see that higher level of confidence, and this is our one project. We're putting a lot of work into it to make sure that we do it right the first time.
Great. How many ounces you think you can produce? What might be the mine life then? So give us a little bit of an overview.
Yeah, absolutely. I mean, right now we're looking at a 5.8-year mine life with an average life of mine production of just under 90,000 ounces a year.
Oh wow, that's a nice amount,
I
would
that's,
say.
That's assuming that we don't discover any more gold. And of course, as you know, we've had quite a lot of success over the years increasing the ore body. So as we attempt to grow that resource, we could potentially see an increased mine life as well.
Great, fantastic. For the mine life, I mean, how much land do you have? How much of that is explored, I would call it? So meaning, what might be, the bigger picture in the longer term, exploration-wise, and of course then also mine life-wise?
Yeah, absolutely. I mean, we have a 25,000-acre land package, which is only about 10% explored today. We just started doing some drilling out there, very widely spaced exploration holes, 500 to, I think, about 1,400 feet. Space. So really just starting to explore that larger land package. Now the great thing about this land package is, combined with our processing facility, which is a very large state-of-the-art facility, if we do make any satellite discoveries, we could potentially bring them right into our production profile at the existing facilities.
Fantastic. Yeah, exactly. And that's one of the key points, I would say, existing facility.
That's right.
So you mustn't add anything. You have the capacities then already there.
That's
so
right.
You can really produce from the spot. Right?
Yeah, with our state-of-the-art ADR plant, we can produce through loaded carbon today. So it puts us way ahead on the path to production.
Fantastic. Where do you see, let's say, the timeline? I mean, you have already, we saw it also in the pictures here, already a processing facility. You have a lot of work done already for sure. So I would say maybe there's a chance to go by end of the year in production, maybe let's say beginning 2018.
Yeah, absolutely. I mean, what we've said is that between 6 and 9 months from making that formal announcement on the timing of production, we'll be in production. And I can't really. It's important to reinforce that we have the permits to start construction today. We have cash in the bank. We have no debt. Just puts us in a very strong position. We could be in production by the end of the year.
Fantastic. Wow, that sounds great.
Yeah.
Jack, thank you very much for that. We keep fingers crossed. And yeah, we will hear then quite soon about the pre-feasibility study
Yes.
for sure. Yeah. And yeah, we take it from there, I would say.
Sounds great. Thank you.
Thank you very
Thank
much. Great. Yeah, ladies and gentlemen, there was Jack Perkins, the Vice President Investor Relations from Pershing Gold. Yeah, you heard it. The company has the money in place. They raised $7.5 million in equity. They have a line of credit from Sprott with $20 million. There's enough money in the bank to really fulfill either the production by themselves or when they do contract mining, it doesn't matter. And we talk about between 12 and $20 million what they need to go into production. And it's a short timeline, 6 to 9 months from the production decision, which will come very soon. And yeah, so from that perspective, I would say this is the next gold producer here in Nevada, out of Nevada. And we keep you posted. Thanks for watching us, and bye-bye from Vancouver.